This section of this show very much crowdsourced. We've got some brilliant charts to look at and some huge moves that have happened in the past. If you want technical analysis and my take on your charts, let me know in the facts links below. This is ARKQ. L. Baker Matthews, the one who faxed this. Thank you very much. This is the previous day we had on the go here. Lovely little harmonic. And the TA resulted in an entry, spot on that entry, right to the cent. The target was for a move of 20%. If you followed it with a stop, you would have got at least that, maybe even as much as 25%. So a huge move on ARK. And of course the TA here working very well, right? So ARKQ, Autonomous Technology Robotics ETF. You can click this. Apparently it'll give us some information. Yes, eventually. Technology and Robotics ETF. It's not performing quite as fantastically as the Tradespotting AI and Quantum Technology Fund. A little bit of investment in the Middle East, in Saudi Arabia. Won't have a huge impact though. Right, so we'll just go and look at the charts as we intended initially. We'll start on the weekly time frame. Make the point that that most recent resistance that we found at the top side of that move that I just detailed, there's a number of points about it. It's one of a number of highs within an uptrend. It met resistance, most recently that ultimate peak. Looking left, that was a horizontal reason for that. And we also know it was the 382 of the breakdown from the all-time Fibonacci from the high. We saw this retracement back down again. It held the golden pocket and it moved back up, tested the 382. You would anticipate a little bit of resistance at that area. And now you've got a 50% retracement here marked out, this horizontal level. It's also the prior monthly low because we've been down here a few weeks skirting at that level. And the question is, does it manage to break this downward sloping diagonal resistance on the weekly time frame? We would probably anticipate seeing something then on the daily in terms of a bottoming formation. If we're looking at this exclusively in terms of price action, we can see that you've got lower highs and lower lows. So a downtrend has been in effect since this most recent peak that came in the center of these two tests, which constitute a head and shoulders. And then from that, you've got a potential measured move. Breakdown from the head to shoulder. Let's say it's a little bit sloppy. And you've got that on the go. That is still potentially going to happen. You can see the horizontal break does come in and around the neckline, which we would define as this most recent low in the head and shoulders, right? So this guy here giving us support. We have gone obviously a little bit lower, but we haven't managed to exceed the golden pocket, and you would anticipate a little bit of a push lower in a downtrend before you see any sort of a bottom information, which you maybe got here with what looks like has potential for divergence. And then you also had a rock outcrop flash talking about move back up. That only took you to the downward sloping diagonal and the daily horizontal, as we saw, looking left, and 382. Okay, so hold the 50% retracement on ARKQ at 51.59, and you're only $1.10 away from that at the minute. Then that's very, very positive, because you've got a previous bottom information and this thing has come back to important levels of support as defined by the high in the previous uptrend, the positive move we saw off the back of this harmonic, and then the double bottom in at around the same levels we anticipate support. So you've got the measured move from the head and shoulders, and if this does break back up again, then you could also use this to anticipate where you might find a breakout. So that's what you're looking for. If ARKQ breaks through the top side, then you'd be checking the prior monthly high as your target. You'd obviously have to go through the weekly high to get there, which is also the previous level of resistance. So you get above 54 on ARKQ, target is 56. If that breaks, then I'd look for a move all the way up to 60, and I'd anticipate under current economic conditions, if you were seeing moves to the top side on ARKQ, then you would be seeing it testing all the way up towards 60. So a big target on that guy if you did get another move, another huge move. Mark that in now. You'd want your entry to be as close to 51.69 as possible. If it gets lower, even better. Your first target obviously be up around 54, then 56, but ultimately you'd be aiming for around 60 bucks. You don't want to hold this if it goes below the golden pocket. You could probably take the prior weekly low as the good area for a stop in at around 51 bucks, 51.20, that sort of area. If it goes below there, it may well be testing these previous lows, golden pocket, or continuation of the downtrend, which could easily happen to be a channel. There's various ways of drawing it. It's quite extreme. Price action take you down to 786, 886 previous lows. That would happen if price action doesn't manage to break out. So you've got the potential for a breakout coming. If you're waiting for it to do that move to the top side, then you wait for 54 as the entry. Price goes above there, you target 56 and then 60. If that doesn't happen, if the breakout doesn't happen, that would be the breakout, then you'll see continuation of the trend that's currently in motion, and price will slip back down into this channel until such times as it finds support looking left. So if you don't hold the previous peak in this prior trend, then it'll be the trough and the previous low where you'll look for support. So that's RQ with a potential trade setup for L. Baker Matthews. Thanks so very much for that one, L. Baker. Next up, we've got a request from Flasher. We've got Levi's, we've got Canadian stock for Andrew, and then we're going to look at Hershey's for your friend of mine, Go Win to Win. I also like to thank Red for recent efforts helping channel. Lisa, you too. Go in to win and delete yourself. Thanks so much over the past couple of weeks. Been really appreciated. On to the next one now with Levi's. Lou. Golden pocket test after a 236 hold. Potentially, you've already had that once. Probably not looking for this on JSE, are you? Right. Let's get this up the way people will actually trade it. Levi's, where are you, real Levi's? Levi Strauss & Co, that's the right one. They make the jeans. So you're looking at this overall price action's gone sideways, hasn't actually got a very detailed chart. These previous levels of support, very important. You can see you're in a downtrend, lower highs, lower lows, and ultimately, if you're taking this from the low to the high, your retracement took you below the golden pocket, but not as far as 786, which is where this important level of support comes in. So not having done that, interesting that you didn't keep going. You still do have this, and I would say that it's particularly important to keep an eye on that diagonal resistance. So we'll draw it on, drop it there. Your approaching price action is approaching that level of resistance here. As we say, this overall dominant Fibonacci, we're not going to go with that because we didn't manage to make support levels within it. So support and resistance as defined by previous price action is the name of the game. You've also got a linear level of support. So if the trend continues, you would anticipate it reaching those lower levels on the Fibonacci that we deleted. You know, so you've also got plenty of tests both sides of this, plenty on the top side, plenty on the bottom. If it does fail, then another low now, you'd be looking at this previous level of support and then the all-time low that you've got on the chart data here for the next moves on this guy. So you would anticipate coming back down if it does break and continue the previous trend. Tests off in at around 12 and then ultimately potentially down below $10 in at around $9 on Levi's if everything goes badly. And that would be continuation of a trend we already see in motion. As traders, that's what we look for on the 4-hour. The question though, is there a break to the top side? Well, there's a rocky outcrop flash down at that target at around $10. Ooh, nightmare. That's not particularly positive for Levi's long term. Though it did come in close to filling it before, so we'll bear that in mind. 1 hour time frame, you got anything bullish here? No, you've got a rocky outcrop flash down at 11 again. So a lot of warning signs here. I'd be very, very careful on Levi's. Anticipate potential breakdown. If we do stick to the 4-hour and speculate on a breakout, you'd be looking at targeting these levels of resistance that you've seen previously, and anything that exceeds that, targeting around 20, 21, 22 bucks. That would also be going back above like the initial price of this thing. So there would be considerations along the way in any sort of a breakout. So even in the most bullish break to the top side, I wouldn't be looking to do anything other than close this gap, finish it at around 1750, 1760, and starts it in around 1650, which really limits any potential upside in terms of risk management. So it doesn't seem like a fun one to enjoy. It'd be quite a stressful trade to manage over a period of time. If you are looking for it, I'd be waiting for a break from 15, targeting 1650. I'd be on tiny time frames, and it isn't necessarily the ticker that suits that kind of management, depending on how it is that you're trading it. Single stock shares underlying that percentage gain with the risk at the top side of a formation, the potential breakdown, everything that you would have to manage that in terms of a stop so close, the frequency of getting taken out. It doesn't necessarily suit that kind of move. May well be that you would be looking to pick up Levi's back down at around $10 and then targeting a move up to 14 and change, 40% on a trade like that. That's easier and better than trying to manage something from 14 to 1650, which is highly likely to be in the middle of a fake out. The really good trade to the top side on this one isn't until it gets back above 20 and you're targeting up towards $28, $30. That's the best long trade on this thing based on its current formation that it's put in. In terms of a long-term investment, you'd be looking back thinking $10 and maybe scaling in all the way down to 8 if you really believe in Levi's. So that's Levi's for Flasher. Thanks so much for that. 1346 was the entry that Levi's got, or Flasher got on Levi's. So an excellent entry there in this previous low, bouncing back up, holding the 236, moves up again, broke that downward sloping trend. That's very good. But I'd be very, very cautious. I'd have my stop in profit. I would want it in at around $14. Yep, I'd want my stop at around $14, and I would be anticipating it getting taken out. I could easily see Levi's testing below 1370 before any sort of a breakout is confirmed. So it may well be that you're right on the breakout, but in your timing so far, fantastic. But I'd be managing that with a stop. So that's Levi's, and then CP. Kansas Pack on TSX. Pack cans, yo, pack cans. So immediate warning signs jumping out in 4 hours. Starting on the weekly. Lots of different information actually coming up here. Very strong trend to the top side on the monthly. Andrew says he first bought this at 90. Sold. Decent profit and looks to re-enter. Well, close to 10% higher all still. This obviously looks like a little bit of a pullback. Questioning, I'd say that looks like it's probably divergent, but then you would anticipate that in such a strong continuous uptrend. On the monthly time frame, go on the Rocky Outcrop toolkit. You can get this indicator on Patreon, Rocky's Patreon. And have we got the moving averages on here? We've got all the different things you get the options for all in one indicator. You lucky, lucky person. So there's your 50 and 200 plopped on. Super easy. Makes it really easy to manage. On the monthly time frame, you're not at the $86 level where you find that 50 simple period moving average. So that's where I'd be looking for tests of $87, especially if you've got a divergent top here, which looks like you probably do. Haven't got the indicator on showing that though. It would be so very easy to flick it on Tradespotting. This is a price action first take on things. Upside monthly, you couldn't argue with that unless it's, you really love arguing with things. Plenty of people do. Plenty of people love arguing, so that is obviously possible. A breaking 87, that you would be defeating this trend here. You've not really had a blow off top or any sort of a formation and price action that suggests the uptrend's over, so people would be looking at this as a potential entry. It is the lowest you've seen it all month, but it's not made it to the 50 simple period moving average. It is though at a peak on price action you got on the 1st of April, so there'll be people looking to enter here. If it breaks, it would be significant here, $98. If it breaks, I think you could lose, upwards of $10, $11 before you saw a significant test. And at around 87.37, this 50 simple is higher than a previous low in that trend. Started that uptrend from this most recent low here in around 82. So it could easily be that it tests these levels, and then you're well on your way to a test of a 236 and a 200 period moving average. So I'd be cautious based on the monthly if I was looking exclusively for those, if I was looking at the moving averages to define the potential volatility and the value entries, then yeah, that would be interesting to see. On the weekly though, 50 simple approaching the 236 in around $92, and that is a very, very likely area for a bounce because you've got so much order flow at that area previously. You would anticipate there being a lot of potential. The problem with this sort of move to the top side, where it's showing such strength in that it's putting in higher highs, but it's reserved in that it's not making extremely large breakout moves to the top side, could give you confidence in entering when it makes its pullbacks. But you have to also be cautious of the nature of these previous pullbacks, that if they get defeated, then anyone who had a stop, you know, at a 1.13 extension of their entry or looking at a previous low within the move, if this price does start like breaking down and going through one support level, those will trigger stops which will cascade price action down to the next level, and like if it isn't a strong uptrend and it isn't showing strength on every consecutive thrust, this does become a question. When is it going to test support and how deep will it be? On the weekly time frame, you would say that the first sign of potential areas to manage your risk there, it would be testing that 236 at 92, 93 bucks, where you'd also likely find price action meeting the 50 simple period moving or 200 period moving average on the weekly. So in at around 90 bucks, 92 bucks, that would be where you might be looking for a long entry and a target back above 113. If you really love this thing, that might be what you're thinking about. Obviously, it's at the prior month. It's creating this month's low right now, so it's not like you've really just reached that amazing opportunity. If you're just taking it back to the previous high up to around 112, you could fashion an 8 to 1. I would probably look for that to actually test the 200 and maybe slip below a 236 on a wick. You could easily get taken out of that because of the average true range, and you can see the extent of that added onto an area of support could easily take you into a stop. The 200 period moving average then being what you'd be relying on people giving you support at that area along with price action, your entry. So 89 bucks might be what you're looking at, 90. Again, same entry as you were previously talking about, and then not wanting to hold it back below 86. That's a big percentage chunk on your stop. You'd have to have the right edge to be taking that out, but you're taking that trade, but you've got a 4 to 1 there that's conservative considering the trend, weekly and monthly, and then managing risk with as deep an entry as possible, because it doesn't necessarily suggest it's broken if it gets beyond that level, you know. Whereas test beyond the 382, at that stage you're losing the majority of the previous uptrend, and I'd be very cautious. So 90, managing stop, probably even closer in around 87. If you could do better than that, fantastic. Watch price action as it happens. Look for a candlestick entry and plan your risk management around the tiny time frames for your entry so you get your best execution. Then target those targets up at around 112. In terms of a percentage move, you've got 23% on a 4 to 1. In a strong uptrend is possible. If it breaks down, I'd be very cautious and I'd step away rather than try to catch it multiple times because it could be bad news. So that's CP for Andrew. Thanks so much for that. And now Hershey's, HSY. It's British people, I would say Europeans, but they also, you know, on the continent here, call it the continent. Chocolate in Europe is a much lower milk count than Britain, so we're not accustomed to it. And then America is so much sugar. A lot of people would say there's quite a distinct difference in this confectionery culture across the pond there. You've got this obvious uptrend. In fact, let's put this in context. You know, it's Hershey's. Is Hershey's? It's pretty much always goes up. Who argues with chocolate? Like those same people, even those people I was talking about earlier, that argue about everything, could probably be happy with chocolate. It's back at a 50 simple period moving average. It's in a really strong uptrend. This is a really obvious area where people would be looking at entries, and at around 185 to where price action is at the minute, as low as 150. 150 gives you a really, really compelling reason to entry because it's got a previous level of resistance, which is likely now support. That also is confluent with a 236. And, you know, even if this is about to break down, that would be the first test outside of the linear diagonal trend that you notice there on the monthly time frame, and it would likely find support at a horizontal looking left before it bounced back up and tested the breakout. So you would be looking for tests that back up around 210, 220 from an entry of 150. That'd be fantastic trade. And you could probably follow it with a stop, because who's to say that it doesn't continue the uptrend that began down at what is now the equivalent of 0.2 and took it to 270, 90, who knows, blue knows. Right, you're looking at this thing, this is, despite its lovely chocolatey taste, it's been very, very good for people. Nothing bad for anybody who invested in Hershey since 1980. Fantastic. What's not healthy about Hershey's? So, yeah, so 150 would be a brilliant entry. The problem is it's already had a really strong and relentless downtrend, which took it only to diagonal and the 50 simple period moving average on the monthly. And the weekly time frame, see now with that Fibonacci, you're back at a 382. That's obviously an entry. People looking at that, looking left, you could still go down further on price action there. I mean, you really could. You could easily come back on down, testing at around 170, and then break down, test the golden pocket at 149.39. That'd be such an amazing entry on Hershey's. It's just I don't think you're going to get it, because so many people know it's in an obvious uptrend and look to enter Hershey's. So this is where people will be looking at 184. They'll have a stop in at around 175. If that doesn't hold, probably the same people will try at 167 with a stop at 164, and they'll try again at 150 with a stop at 143. All of those people, the vast majority of them, will have a target back above $300. Pardon me. How out of character. So yeah, you're looking at this thing thinking, well, where do I get it, right? I'll buy all the chocolate bars in the world if you had enough money. So it doesn't really matter how much they cost too. They're a finite product, but you pay anything for chocolate if it came down to it. So it could be a squeeze on Hershey's. A squeeze from 192. There's nobody short on Hershey's. Is anyone actually short on Hershey's? They're not Hershey's. If they were Hershey's, wow, what a bargain. Tradespotting, you're nearly finished this. So Hershey's, I think it's a fantastic, compelling trade with respect to the trend. And if you're looking at managing your risk, those are the areas to go for. On the daily time frame, you've got an awful lot of flashes. At some point, it could be a huge problem if they discover chocolate's bad for you, or some other ingredients inside chocolate bars don't work out. Maybe it does come back down. But it's hard to argue with that uptrend. On the 4-hour time frame, you get anything immediately there? Obviously big concerns. I mean, is the chocolate economy going to completely collapse? Somebody going to invent a synthetic chocolate which is cheap and you can make it at home? DIY chocolate? If so, Hershey's will be back. It won't hold 150. It'll come to 85. If that doesn't work out, you'll see it at $3. I know that's huge. How do you go from 150 to 85, 85 to 3? That's the levels it'll go to if synthetic DIY chocolate, download it off your computer. There you go, instant delivery. If that happens, Hershey's will go down to $3. Otherwise, yeah, those are the entries. Thanks so much for those. Thanks very much for supporting the show. I've got another video out today about the Ukraine-Russia conflict, and I think areas that we're compelled to think about as investors and responsible members of society. Obvious lessons that we can learn from things that are happening right now. Not in order to speculate on other people's misery, but to promote a positive, empathetic, understanding chat box, which I'm so proud of. Thanks so very much for watching this show. Thanks for being part of what I'm trying to do here. Hit the like button if you got something from it. Subscribe if you're new. If you're a returning viewer, I appreciate you so much. See you in the next one.